Hello, I'm Brian Harris with Harris Mortgage. Thanks for watching. If you're watching this video, it probably means that you have an interest in getting pre-approved for a mortgage. Well, let me say this to you directly. I want to be your mortgage broker. I want to be your loan officer. I want to be the person who guides you through this process, where in the end, you're going to have a new home or a better loan. So here's what we're going to cover in this video. We're going to talk about what it means to be pre-approved. We're going to talk about our pre-approval process. We're going to look at what an underwriter looks at when you turn in your loan. We're going to go over 4 reasons why you should get pre-approved before you start shopping. We're going to go over the 13 steps of the home buying process. And finally, the Harris Mortgage advantage. So what does it mean to be pre-approved? You're pre-approved, it means a loan officer has reviewed your credit, they've calculated your income, and they've verified your assets. They've taken your information and they've submitted it to an automated underwriting system, usually with Fannie Mae or Freddie Mac. So it's a computer, and you've received an approval. What about pre-qual or pre-qualified? I hear that sometimes. What pre-qual means is that you've given verbal information or just partial documentation. So pre-approval is stronger than a pre-qualification. Submitted offer to purchase a house means nothing without a pre-approval letter. The listing agent will literally crumple up your offer and throw it in the trash. So when it comes time to submit that offer, you're going to communicate with me, or your realtor will communicate with me. I'll generate a pre-approval letter and they'll attach that to your offer. Also, at this time, unless your realtor tells me not to, I'm going to call the listing agent. I'm going to tell them about you, and I'm going to get them comfortable that you're going to close your loan, because I don't write letters for loans I can't close. I don't want to waste my time or yours. Next, I wanted to go over the Harris Mortgage pre-approval process. It begins with an initial contact. That's where we meet either in person, on the phone, or via email, and I get to understand your goals. Once we've made initial contact, then I'm going to direct you to our online loan application questionnaire. This is a modern web-based loan application. It's super smooth, it's secure, and it's easy. You don't need to call me when you're done. I'm automatically notified, and the information flows into my loan origination software, which I operate out of throughout the loan transaction. Now that you've completed the loan questionnaire, I'm going to request documentation. Now the documentation can be as simple as a pay stub and a W-2, or if you have a more complicated situation, I might need multiple years of tax returns and might need rental agreements and who knows, divorce decrees. But I only ask for information after I understand your situation. So I ask for enough, but not too much. I'll never ask for anything that I don't need. Keep the login information for the online questionnaire handy throughout the process, because it turns into a secure portal where you can securely provide me documentations throughout the loan process. However, you don't have to use that loan system. You can send me via email, mail, fax. You can drop off. I can meet you however you prefer to operate. Once I have your information and documentation, that's when I go to work. This oversimplifies what we do, but we're going to pull your credit, we're going to calculate your income, we're going to verify your assets, and we're going to run your situation or scenario through an automated underwriting system at Fannie Mae or Freddie Mac. If we receive an approval, then you're pre-approved. The only thing left to do is provide you loan options in an easy to understand way without any surprises. I'm going to provide you loan options, different scenarios next to each other, and they're all going to be broken out in such a way that for your payment, you'll know exactly what it's going to be. It's going to include your mortgage, your homeowner's insurance, your property tax, if you have them, HOA dues, and mortgage insurance. So it's all going to be included. Also, we're going to provide you what your cash to close will be, and that's going to include your down payment, any closing costs, and if required, any additional reserves you need to hold. So when you're done with your pre-approval process, you won't have any questions about how much your payment will be, how much money you're going to need to close. The different loan options aren't just presented next to each other, but they're compared to each other. So when looked at, it really will guide you to the loan program that's right for you. So I'll do the heavy lifting with regards to analyzing the available loan programs and present them to you. So it's very important that I understand up front what your goals are, so that I'm presenting loan options that'll help you reach those goals. Once you're pre-approved and you've received your loan options, you're going to know exactly how much you're pre-approved to purchase. If you have a max payment you want to stay under, you'll know exactly what price you can't go over. If you only have a certain amount of money to put down, then you're going to know what your limitations are. So you come out of this pre-approval process super informed. Next, let's talk about how an underwriter's going to look at you. Do you know what the 4 C's of diamonds are? Most people do. They are color, clarity, cut, and carat. A lot of people don't know what 4 C's of underwriting are. They are character, capacity, capital, and collateral. I like to tweak those a bit. They don't sound as cool with a bunch of C words, but I translate them to credit, income, assets, and property. When you're getting pre-approved, you usually haven't identified a property yet. So we're going to remove the property and just look at credit, income, and assets. So let's take a quick look at how an underwriter's going to look at you from those 3 perspectives. Credit is the single most important variable that will control if you get a low interest rate or not. An underwriter will look at your score, but they're also going to analyze the whole report with a focus on recent lates and derogatories. We pull scores from the 3 major credit bureaus and use the middle score. If you're applying for credit jointly, we'll use the lower of the 2 borrowers' credit score. If you're the Dave Ramsey type who doesn't have a car loan, no student loans, no credit cards, you never had any debt, you pay everything cash, while that's a worthy pursuit and it's not a bad way to be, it won't help you get a mortgage, because mortgages, they need to show your ability to borrow and to pay it back. So you need to establish some credit in order to get a mortgage. Credit shows your willingness to pay back debt. So I like to say your credit will determine if you can get a mortgage, but your income will determine how much money you can borrow. So let's jump ahead to income. With regards to income, you're going to hear this phrase commonly. You need income that's steady, predictable, and likely to continue. So steady, predictable, likely to continue. Qualifying income is different than the AGI on your tax return. If you have a steady salary job, we can likely use the whole gross amount of your pay as qualifying income. If your pay is more sporadic, if you have commissions, if you have bonus, if you're self-employed, if you have rentals, all those circumstances have specific rules that you need to use to calculate income. What separates good loan officers from bad loan officers is their ability to properly calculate income. If you have a loan that has trouble closing near the end of the process, it's probably because your loan officer didn't calculate income correctly up front. How does an underwriter look at your assets? Well, it's pretty simple. You need to verify your assets, typically 2 months of bank statements, that you have enough money for your down payment, closing costs, and if required, reserves. Next, we're going to talk about the 4 reasons why you should be pre-approved before you start shopping. The first reason you should get pre-approved early is timing. So this happens all the time. I get this phone call, it's usually from a realtor. It goes like this: Brian, I hope you're doing well. Such and such is gonna call you. They need to get pre-approved and they wanna put an offer in on a house today. I told them to call you weeks ago, months ago, and they said they would, they never did, but now they want this house and we need to move. So I welcome that phone call. Like, I work weekends, I work late. I welcome that phone call. But sometimes there's a happy ending. Typically, it ends up like this. The house is hot. It goes to someone who's already pre-approved, who has their act together. They're able to act fast and secure the property. And my borrowers, I end up getting them pre-approved, and they end up getting the second house they find, but they lose that first house just because somebody else was more prepared and ready to submit that offer. The second reason to get pre-approved early is for corrections and improvements. So part of the process is pulling your credit report. You get to check it out. Make sure there isn't anything on there that shouldn't be. Maybe there's something you paid off that's showing as not paid off. So you have time to correct those things. And those actually aren't quick fixes. They take some phone calls and take some time. So you have time to fix things. Also, maybe I can show you a couple things you can pay down. You can get some points on your FICO score and can end up getting a better rate when you get your mortgage. Maybe you have a second job and you have to work a couple more months to be able to use that income. So you have time for income planning, and maybe you're self-employed, you have a good year. You can file your taxes and then use that new tax return to help you qualify. So you have time for tax planning. So it gives you time to make some small changes that can make a big difference with your mortgage. The third reason to get pre-approved early is proper price point shopping. So I've seen it before where people, before they get pre-approved, they start looking at houses, just go into open houses that are available, and they start looking at these houses with big yards and quartz countertops and wood floors. And then once they become pre-approved, they realize they need to be looking at, places with smaller yards and laminate flooring, and so that's okay. But the whole time they're bummed out because they're anchored to those initial properties that they looked at. But if you get pre-approved early, you'll make sure that you're shopping at a price point that you can A, be approved for, and that B, you're gonna end up with a payment that you're comfortable with. The fourth reason, education. So you come out of the pre-approval process much more educated than you go into it. It's a great learning experience. Hopefully we've convinced you to get pre-approved before you start shopping. Now here's an overview of what you're going to be getting yourself into. Okay, the 13 steps to buying a home. Number one is the initial contact. That's where we connect on the phone, email, in person, and I understand what your goals are. Number two, you get pre-approved. Number three, the fun part, you start shopping. You found a house you like, submit an offer. Your offer is accepted. I'm going to spring into action. Your loan application and disclosures are signed, usually e-signed. We decide on a lender and on a loan program. Processing. So in this step, an appraisal is ordered, a title search is completed, your income, assets, employment, homeowner's insurance, all those things are verified, and then the loan is sent to underwriting. In underwriting, an underwriter will review your loan and send us a list of requirements not yet met. Those are called loan conditions. Once all your loan conditions are signed off by the underwriter, your loan will be cleared to close. A closing disclosure, or CD, is sent out, which summarizes all the terms of your transaction. We're almost done. Loan documents are generated and an appointment is scheduled for you to sign them with a notary. Your loan is then funded, and any additional money that you need to bring in will need to be sent to escrow. We're recorded, it's yours, it's official. Congratulations, you have a new home. Next, I wanted to talk about the Harris mortgage difference. Number one is my financial analyst background. So I'm a chartered financial analyst. It's a very difficult designation to obtain. I spent the first 12 years of my career working as a portfolio manager and an investment analyst. So let me ask you this. when you're buying your biggest asset, secured by your biggest liability, so that's talking about your house and your mortgage, do you want to do that with just an order taker who's going to churn you and burn you? Or do you want to do this with a financial professional who works to understand your goals and make sure the mortgage fits within those goals? I bet you do. So that's what you get when you're working with Harris Mortgage. And I wanted to add, you're going to get this if you work with any loan officer at Harris Mortgage, because it's in our training, it's in our culture, and it's how we do business. Next, I'm a broker, so I'm not tied to any one lender's products. I think of it like a car dealership. So if you go to a Ford dealer and you want a truck, they're going to show you the F-150. But you say, hey, I kind of like the Toyota Tundra, and they'll say, we don't sell those. So when you're working with a broker, I work with different lenders and can offer all of their products. So by working with a broker, I'll do the shopping for you once I understand your goals. It's very critical. I've repeated it a number of times. But then I can go find the lender who has the best program to help you reach those goals. Mortgage Advantage 3 is that we're commission based and we don't collect salary. So a lot of banks, large banks, the loan officers, they'll check in when the bank opens and they'll check out when the bank closes. But a lot of action takes place. People are off work and on weekends. So talk about writing those pre-approval letters. I do that all the time at night and on weekends. So I'm always working. All the loan officers here will do the same. So we're here to serve you when you need it. Also, we're only paid when you get what you want, and that is a closed loan with a good rate. And so we hope to blow you away with our service, so you tell all your friends and family about us, and that's how we're going to grow. Harris Mortgage Competitive Advantage 4 is competitive rate. We've made a decision here to make a little bit less money per loan, but to be more competitive on our rate. I'll be the first to say rate's not everything. Service and programs, those things are very important as well. The ability to close on time and the ability to provide service to your clients is very important. But rate's important too. So know when you come to Harris Mortgage, you can get a very competitive rate. Harris Mortgage Competitive Advantage 5 is technology. It's an interesting time to be a loan officer. I don't think the technology will replace the loan officer, but I think loan officers who utilize technology are going to replace loan officers who don't. So we commit to be on the forefront of technologies, and where appropriate, implement those things that will make the process smoother and easier and more secure for our borrowers. Let's recap. I hope you have a better understanding of the pre-approval process now. I hope you realize that the sooner you get pre-approved, the better. Harris Mortgage can find the best deal for your home loan. We're not the lender, so we don't push you into any one of our products. And unlike your banks, we only do one thing, mortgages, and we do them well. We utilize modern web-based technologies to make the application and approval process smooth, easy, and secure. We secure your pre-approval and then shop hundreds of options till we find the loan that's right for you. We present loans in an easy to understand way. In the end, we deliver a low rate with a fast and easy process. We don't only help individuals obtain mortgages, but we help set them up for financial success by understanding their short and long-term financial goals, making sure the mortgage fits within that plan. We don't only want to help you open a door to your new home. We want to help you open a door to your new life. Thank you.